Hello. In our previous video, we were discussing about the step 1 and 2 of the overall P&L analysis, where we identified the revenue performance is low and we need to focus on the expenses. So the step 2 was on to analyze the marketing reports for the rooms division and and F&B division, which is comprising of more than 90% of the hotel revenue. We looked at, so we have other videos on those things. In this video, we are going to focus on the individual P&L for rooms division and F&B division, so that we can identify which expenses are supposed to be focused on. So this is the room division P&L. So the way to identify the expenses, the high expenses which you should be focusing on is, first thing, we look at the variance column. Here the revenue variance compared to for example previous year is 30%. However, so whatever expense are increasing by more than 30% is our target to control. So here you can say cleaning supplies are increasing by 32%. So there are two factors when we are analyzing the revenue. So one way is the absolute term, which is you can say top 5 or top 10 top 5 line items, which is very clearly you can say that labor cost is 5.9 million, 1.6 million for the commission, then you have complimentary access, then you have supplies, guests. So these are the major expenses, and then you have TV and movie expenses. So out of 8 total $13 million expenses, the 5 plus 1 7 plus 3 10, around $12 million is comprised of those 4. So we don't need to focus on every line item, otherwise we may be losing our focus. So we need to focus on the item which makes the biggest impact in the P&L. So here you can see the labor cost, even though the drop is only 4%. So here you can see that actually, yeah, drop is only 4%, but the revenue is dropping by 30%. So which means it's not enough. So whatever expense is dropping less than 30%, that will be our focus. So here in this case, room revenue is dropping by 30%. So this expense is, first thing is our criteria, the labor cost. Then you have cleaning supplies, which is dropping by 32%, which is fine, because it's dropping in the same proportion, which is okay. Now commissions is dropping only by 12%, which means there is a problem here also, because if the revenue, the commission should be based on the revenue. So if revenue is dropping by 30% only, so commissions is dropping by only 12%, which is a problem here. But there may be many reasons in the performance. So maybe the commissionable revenue, which is coming from the most of the OTAs, i.e. booking.com or travel agents, may not have dropped, but the other segments where the business is not commissionable, for example corporate or travel agents, it might be dropping. So just only looking at the percentage is not enough. We need to understand the revenue segmentation, which segment is dropping. So each expense here is related to either overall revenue, overall occupancy, or to a certain segments of the business. So in our particular hotel, we need to identify those kind of expenses separately. So now the next line of item is complimentary gifts and services, which is dropping by about 43%, which is a very reasonable amount, because if the occupancy is dropping like this, then and the expenses are dropping by more than that, which is fine, which is just increasing the profitability. Now the next line item, which is not dropping very well and is significant, is the supplies guest. Here is dropping by 28%, which is not very different from the revenue drop, which is it can be accepted, because supplies guests are not 100% variable, is semi-variable cost. The next big item here is the reservation cost, where you can see 467 compared to 593. The expense drop is only 21%, and it's a quite significant item compared for the hotel profitability. So here again, reservation expenses are also segmented. They are concerned only with the direct business and OTA bookings. So it doesn't really give, if the segmentation, the revenue, revenue from those segments is not dropping, then the expense percentage will be dropped. So if you are asked a question why the expenses are not dropping in the same line as the revenue, you should be able to associate these expenses with the particular segmentation, so that you can explain the reasons why the expenses are not either not dropping or are increasing. There may be a case where the revenue is dropping, however the expenses are increasing. For example, uniforms here. So the expenses last year was only 60,000, here is 100,000. So the management may ask you, the revenue is dropping by more than 30%, but however your expenses are increasing by 50%. So you should be able to give them the details. So that was our step 4, where we want to understand the drill down of those expenses to drip to into further details of what are the reasons of these expenses, why they are either higher or they are not dropping in the same ratio as the revenue, or they might be increasing compared to the increase in revenue. So the next step is to identify these, either relate them to the segments, particular segments of the revenue, or to get itemized details of these expenses, so that you can review the details. Here, for example, TV and movie expenses, which is 383 compared to 446, which is dropping only by 14%. But you need to remember, there are fixed expenses and there are not so fixed expenses. For example, laundry, uniforms are supposed to be washed. There is a room, there is a business, or there is no business, so those expenses cannot drop. So and TV movie expenses are also fixed, because the subscriptions normally are fixed and are contracted, so you cannot drop them so significantly compared to the revenue. So you must be able to understand the details of your expenses, how much percent of the expenses are fixed and how much percent of the expenses are variable. So this one is, in one video we cannot explain all the expense natures. That depends on the hotel's individual structure. So in your assignments, which we'll be giving you very shortly after the videos, you need to be able to understand and analyze your own P&L and be able to identify variable and non-variable. So if you are not sure what are variable and non-variable, you can always comment in the discussion forums, so we will be happy to answer them. In the next video, we're going to be looking at the F&B P&L.